Welcome back, everyone. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management. And thanks for joining us again here every Tuesday where we do our live Mike on Money market update and talk about everything that's going on. And this week, we're going to be talking about the year in review. So looking back at the year of the pandemic, of the closures, just a reminder of kind of everything that's happened and also where we're at today. And talk a little bit about where things are headed. We did cover quite a bit last week when we talked about innovative and disruptive technologies that really become to the forefront through the pandemic. But we'll take a look at what and how we got there, how we got here through the last year. But with that, let's dive into things and take a look. As always, everything we cover here is for educational purposes only. Don't take it as solicitation or advice. Always reach out to us if you have any questions specific to your situation, or do your own due diligence, or seek some professional help to make sure that anything you see here applies to your situation. And as always, if you're watching live, just click that the Q&A button, and you can ask a question. If we don't get to it, which we haven't been getting to them by the end because I ramble on too much, we certainly will reach out to you and answer your questions. If you're listening to the podcast or recording on YouTube, just go to mikeonmoney.com. You can reach us through there, either email, phone, or book an appointment. We're always happy to answer any of your questions. So with that, let's dive right into what's going on in the economy. Of course, we're looking at this week, we're looking at the optimism index for April. So just kind of taking a gauge of how people are feeling with the vaccine rollout, how the outlook on the economy is, and just the overall sentiment out there as far as investors go and economic recovery goes. The stock futures, despite having a pretty good week last week and the start to this week, the stock futures across the board kind of ticked down a little bit, not much, and really given the run that they've had in the last week after a slow few weeks prior to that, and not surprising, there's a little bit of profit taken off the top, or just a bit of slowdown on that momentum. So nothing we're really concerned about there. The outlook is still very strong for the markets. More into that value trend as we've talked about, and again into those innovative technologies. On the taking a look a little bit deeper, Biden put out his U.S. infrastructure plan. It was actually quite popular across the board, but it needs partisan support. Looking at doing $2 trillion that's going to address road repairs, internet upgrades, which is big, of course, brought to the forefront, especially for smaller communities or more rural communities around educational needs. And other initiatives that were very popular. I think the big challenge that they have is, it's being touted as a Democratic bill and sold as the Biden-backed plan. So, of course, the Republicans are not going to be in favor of that name. But all in all, everyone seems to be pretty positive on the overall plan. As we talked in the past, the hedge fund, I'm going to try to pronounce this again, Archegos, I think it is, Archegos. It's a Greek word. It's all Greek to me. They're with Nuruma. Nuruma backed them financially. We talked about it a couple of weeks ago. They're going under. Of course, they're trying to bail it out and trying to come back from that failing and reopen a new hedge fund. But we'll see how that plays out. There were some big losses taken there, and I think it'll be a little bit longer than they expect to kind of get it back. If you saw in the news, LG smartphone is exiting building smartphones. They were one of the first ones, and their claim to fame was kind of bringing out the Android phone. So they were one of the first big builders of the Android phones. They've decided to exit the mobile business. mobile making business anyway. So some opportunities there for Samsung to step in as kind of one of the biggest rivals in that North American smartphone market. So we'll keep an eye on that, but a good opportunity for Samsung to pick up some market share on the hardware side of things. U.S. service sector gauges the scales with the record highs and cost pressure mounting. So just going back to inflation, we are seeing the service sector numbers coming in, again, record highs, bounce back, especially as we're seeing a surge of new economic growth especially in the U.S. as they reopen with the vaccines being rolled out. I think the last number I saw in the U.S. vaccine, they were through 165 million vaccinated and doing about 3 or more million vaccines a day. So really pushing forward on the vaccinations and reopenings. But we are seeing that inflation number kind of increasing as we go along. Yellen is pledging for the U.S. international corporation and calling for a global minimum tax. So this goes back to a long-standing problem in the U.S. where companies tend to play a little bit of a shell game with their money and the taxes. So they might be operating and selling in the U.S., but they'll have corporations set up in Ireland's a big haven, of course in the Caribbean. Offshore UK on the like Guernsey and Jersey and Isle of Man, tax-free havens. They'll move their revenue around to pay as little tax as possible. So Yellen's moving to come up with a global minimum tax. So just based on their global earnings, there's a minimum amount of tax that they have to pay in the United States. Not a completely unpopular plan or a program. But of course, not favorable with the Republicans who like to give out tax breaks to all the rich companies and the rich friends. Biden's moving for a higher tax on corporations, and it won't harm the economy. Really, I kind of agree with that one. Remember under the Trump administration, they did a bunch of big tax cuts, billions and billions of dollars out of the tax funds. And really that just went to the corporation savings account, and a bulk of that money went to just buying the stock buyback plans. So it really didn't go to help the economy at all, which is kind of what it was supposed to do. So retaxing that back again shouldn't slow down the companies at all, because again, it's not like they reinvested into growth. They just stuck it into the bank account or bought back stocks with it. The crypto market soared to an all-time record high, about $2 trillion. Bitcoin represented about 1.1 trillion of that. So we're still seeing a lot of investments into the crypto market, mostly driven by a lot of funds have come out to make cryptocurrencies accessible to people in their investment accounts or RSP accounts. And that's just opened it up for more and more people to be able to buy into it. So more access, more demand, limited supply drives up the value. The Bitcoin price itself, while still moving up a little bit, last I looked, it was about 61,000 US. Not really too much higher than previous. So it hasn't actually taken off. But what we're seeing is those funds diversify their investment across a lot of cryptos, so the overall market is increasing there for sure. Of course, the vaccine rollout here in British Columbia moves along. We're at 71 and older, so 1950 or earlier, or if you're an Indigenous person, 18 or older, you can go. The online registration opened today. I did go look at the site, but of course, I'm not eligible yet, so no clicking for me. But if you fall in those categories, you can go online. You can still call and book your appointment. More and more people are getting in it, and it's moving along pretty quickly. So hopefully, it will continue to accelerate as more and more supply of the vaccine comes in. The variant, of course, has been the biggest challenge here. Well, in Canada, we're seeing the numbers really increase in BC. Of course, we're in a shutdown. Ontario's gone back into a shutdown. Lots of Quebec never left the shutdown. So we continue to see challenges around the numbers. and the ICU numbers are rising. So hopefully we can reopen on April 19th, especially if the vaccine continues to roll out as quickly as we're seeing it now. And of course, I think we mentioned last week with Whistler closing and other ski resorts in the province being shut down as well, just to try to limit the transmission at those areas. Let's take a look at the global markets coming up in the US. The US economic data, the Labor Department is expected to report their job numbers for February. We do expect a rise. Again, they are reopening. California has kind of reopened things, and Texas, of course, was one of the earlier ones. And as things reopen, that just means more jobs. Still a challenge on the job front. There's still a lot of numbers to come down there, and hopefully we do see some economic recovery fast enough to keep up with. Some job losses are going to be permanent, but creating new ones faster than we're losing them is the goal. Obviously, the Democratic plan, the stimulus package, that was putting a lot of money around that to try to create the new jobs, and that infrastructure plan also creates a lot of new jobs. So things are looking good on that front, and hopefully the trend continues. On the World Economic Outlook, the Global Financial Stability Report is being released by the IMF and World Bank for the 2021 meetings. So we'll keep an eye on that. And Brazil is scheduled to release services and composite manufacturing index data for March. The readings for February were 47 and 49 respectively. We're hoping those are going to increase slightly. It's a bit iffy on that one, but we shouldn't see a big decrease, and that's what we're looking for. U.S. top news: the U.S. Supreme Court is backed Google and Oracle over a major copyright case. So, there's so many of these big cases, Apex video games suing or in a lawsuit with Apple and I think Google and Oracle, all these, it's kind of watching the King Kong versus Godzilla movie. Not sure who to root for here. In the end, someone's going to win, and there's going to be a little bit of money changed hands. But all in all, these things, seem to be background noise for these companies. Doesn't really affect their stocks or their businesses. But in this case, anyway, Google or Alphabet, its parent company, won over Oracle on a patent or copyright on the Android operating system. So good for Google on that one. Tesla shares surge after the company's post some record deliveries. So Tesla shares not back to its previous high, but it did move up almost to the 670 US range. After record deliveries, strong demand out of China has offset some of the impact of trying to get the auto parts and slow down and productions as we try to continue to build cars. And as we've talked about Tesla many times, of course, there's going to be more and more competition to this space, but there's still the bulls out there on Tesla. I'm not, as everyone knows who follows, I'm not a big, I'm a Tesla fan, but I'm not a big fan at the share price right now. It certainly can go up. There's nothing stopping it from doing that. Again, it's a bit of supply-demand curve, but all in all, I think the outlook for their stock price is going to face more competition and pull back. So there are calls out there for, there's one call for $1,000 price. I even saw one for a $3,000 price target on Tesla. So, there are the bulls out there on Tesla. Personally, I like to see more value and cash flow outlook than I see there right now. GameStop. So going back to the stonks rally from Reddit. So GameStop is, their stock, which is probably worth sub $20 a share. If you really look at an intrinsic value view of it, it's trading about 189 right now US. Still kind of being held up there by those Reddit, smaller investors, call it a social experiment that they're doing, kind of keeping that value up. Well, GameStop's going to go raise money into that market. They're talking about raising up to $1 billion of stock sale. So this is a dilutive effect. Basically, they're issuing new shares. So, the company is still worth the same, but you increase the number of shares. Each share dilutes down. But why wouldn't they go sell stock at 189 bucks a share when it's probably not even worth 20, just to recapitalize the company and try to reinvent themselves and build it back up? So not a big surprise. In fact, AMC, the theater company, did the same thing when Reddit ran their stock up. They went out and raised, I think, roughly $1 billion and recapitalized themselves to help them carry through the theater closures. So not a surprise that they're doing this. Again, wouldn't be something I would recommend anyone to jump on, but it's out there. U.S. is putting J&J in charge of the plant that botched the COVID vaccine that was being run by AstraZeneca. So you probably heard this in the news. There was a plant in the U.S. That 15 million doses of the vaccine was contaminated. So now the good news is it didn't ship, so no one's at risk. It didn't leave the plant, but it was botched in the mix, the chemistry behind it, and the ingredients. Ratios were mixed, and it had to be 15 million doses had to be scrapped. So the U.S. Which owns the facility, is pulled the management of that from AstraZeneca and given it to Johnson & Johnson. So Johnson & Johnson will now be producing their vaccines out of there, and those dosages going out moving forward. I don't know if it was all on the botch, the botch batch of 15 million that they're doing this. It could be a lot of the controversy around AstraZeneca, just putting more J&J vaccines out there just might hold a little bit more confidence for people. I know there's a lot of debate going on around the AstraZeneca, or Zeneca rather. So this just might be the US's way of saying, hey, if people are going to be iffy about AstraZeneca, let's give them more J&Js because no one seems to have any issues there. So maybe a bit of both went into that decision-making process. And of course, on the oil and gas front, if you followed through 2020, we talked a lot about the mergers and acquisitions happening, still going on in the oil and gas sector. They're getting a bit pricier here. So Pioneer Natural falls, Pioneer Natural's price fell on the $6.4 billion deal for them to buy Double Point Energy. So this is just the market saying, maybe you're paying a little bit more than you could have 6 months ago. And they're still recovering. It's not like Pioneer is experiencing huge profits. So a little bit of negativity around the M&A, but it still continues there for sure. And on that M&A front, we talked about this last year. Transat was going to be bought up by Air Canada. Pre-pandemic, they had a deal. During the pandemic, they renegotiated that deal down from it was over 300 million down to 188 million was going to be the buyout. And now Air Canada has walked away from that, just basically saying, they blamed it on antitrust hurdles in Europe. However, I don't think Air Canada was really enthusiastic about this deal given the current environment. So obviously Transat shares have slumped. In fact, they're in a situation that they're going to have to probably restructure some debt or raise some more capital to pay down some debt, given that they were in pretty challenged state, as pretty much a tour or vacation operator, where all that business has been closed down. Air Canada was a little bit of a savior on that front. But with the deal falling through, they're going to be left on their own. So we'll have to see what happens with Transat. As most of you know, I'm not a big fan of investing in airline businesses to begin with. So I don't know if this changes any views I have of those two companies. But obviously a little bit less stress on Air Canada to take on that debt and that operation given the current marketplace. Again, with oil and gas here in Canada, Interpipeline gets a $325 million grant from Alberta for their petchem plant, the petrochemical plant complex in Alberta. And this is in the middle of Brookfield Infrastructure Partners trying to buy up Interpipeline. So it's a hostile takeover. Interpipeline's not in favor of it, or they're not in favor of the current price that's being offered. So that battle continues on. But in the meantime, they just got a big injection of cash from the province in order to build out their Heartland petrochemicals plant there. Barrick Gold nears an agreement to reopen its Papua New Guinea mine. So this was shut down. Oh, it was shut down, geez, over a year ago. It was shut down by the government over there, just on dispute on the rights and profits out of that mine. So they're now close to an agreement to reopen that. So it'll be good for Barrick. Canada's Whitecap Resources is going to buy Kicking Horse Oil and Gas for over $300 million. So they're again, just another acquisition. This one's a little bit more favored by the markets as not being too overvalued, but still kind of a late stage M&A acquisition for Whitecap. On the dollar front, we did see the US dollar weaken a little bit. Of course, this just goes to the trend we've been seeing for the last 12 months. Markets are strong, dollar goes down, markets are weak, dollar goes up. So people, when people are afraid or the outlook is negative, people move their money into what's considered the safe haven or the safe currency, global currency, and that drives up the US dollar a little bit. With that weakness, we saw the 10-year note fall to 1.69 for 1.71, and remember, kind of target is the mid 1.8s for inflation to become more and more of a concern. But again, this is up from sub 1% in January, so we are seeing it move pretty steadily through this year. On the oil front, we did see just around 1.5% increase in the price. So some positivity in there. OPEC Plus OPEC Plus meeting came out with, they're going to gradually increase the supply to the market, and that's being viewed as the demand is slowly increasing as well. So as demand starts to increase, of course, very positive for that commodity. And we are seeing, UK is starting to reopen more and more with their vaccine rollout. Other countries in Europe and the Middle East doing well, and of course the US. In fact, domestic travel in the US has really started to increase as more and more places open up as well. So all that tends to lead to more demand, especially on the oil and gas front. Gold did creep up a little bit, still shy of the 1,800 an ounce highs of last year, but again, still a good focus as far as inflation hedge goes. Copper continues to edge up off its all-time highs, but still continue to stay strong as demand for copper continues to stay up there, and that goes into a lot of construction. Of course, the electric vehicles, technology uses a lot of copper, being the main conductors, but also housing and construction. Kind of your high-rise construction uses alloys in the metals, and copper always does well when we're in a boom there on that front. And there's been no slowdown in construction, especially in North America, as big projects move forward, despite the economic slowdown. The cheap money or cheap borrowing cost continues to drive that up. So let's take a look at our year in review. Now, if we look back a year, and it has been just over a year that we went into the pandemic closures. I remember last March 5th, I think I mentioned, was my last live event with a lot of you in attendance, where we talked about tax time and how to try to prepare for the tax year ahead. And that was the first week of March. Of course, right after that, everything closed down. And if you remember, it's hard to even think back. If you remember how hard Italy and Spain, some of the early countries to really come into focus of, kind of the mass lockdown, not even allowed to go in the street for any reasons. The tragedy of seeing, the backup at the morgues and funeral homes, and just such a loss and devastating hit to their economies and their populations. And then quickly after that, of course, as the world went into lockdown, more and more people living in isolation, especially the elderly. Of course, if any of our the seniors were in the homes, they couldn't have visitors, they couldn't leave. Even people who are in their own homes, they couldn't have people over. the risks were really high. The schools closed down. We went into homeschooling. I still feel really bad for all the parents that had to try to work remotely and of course teach the kids. All their entertainment and sports stopped. If we look back, it was closed for most of last year, reopened in late summer again. We had to reshape education, right? To switch into online, which the kids, are doing now. But, that was a big, hard flip for the education system, the teachers, even people at home to figure out setups and computers for a lot of communities who didn't have ready access to those things. How we did our shopping, people who I thought would never be e-commerce shoppers, even my mother out there ordering groceries online and scheduling drop-offs to her place. We went through this massive shift. We also went through a year of defiance, and we're still seeing that right now. Obviously, even here in BC, with the recent shutdown, a couple of restaurants, against orders, stayed open for full sit-down dining. But not just them, they were full, right? There was a lot of people that were going to that. We're still seeing protests, anti-lockdown protests around the world, not just here. So we saw the kind of two sides of the coin with that over this last year. We went through a U.S. election, and what an election it was. Of course, with everything that went on, with the aftermath of that election, but leading into that election, if you think back of everything leading into that election, the controversies, the leadership races we saw, of course, the Democrats race to get to Biden as their candidate, and all those, the other candidates that kind of went through there, and the people, we're still seeing some of those. Of course, Harris, Buttigieg are at the forefront of the new administration, but also we looked at global leaders, how they did through all this. They were kind of put under a microscope. Some excelled, and some were challenged, and some did really well at the beginning, or at least the perception was that they were doing really well at the beginning. And then the popularity as the pandemic has gone on has kind of waned through all this. And I think we see that, at the federal level, we see it at the provincial levels, or, globally, we're seeing that as people, the tiredness or the frustration has weighed heavily, I think, on everyone. And that's one thing, when I was kind of looking at this past year, thought, what has happened through this year, it's going to be really interesting to me to see how history judges how the world handled this, and also how, every country reflects on how their leadership did through this pandemic, whether it's going to be very favorably or very harshly. Because of course, we had the stimulus packages from these leaders and from these governments come out, and just speaking about Canada, but I think some of it could be related to the rest of the world as well. The impressive part, I think they did really well, is the speed in which they came out with it. And the challenge with being fast out with such a big program, or such a vast, broad programs that they came out with, everything from salary subsidies, rent subsidies for corporations and individuals, the CERB for individual for paychecks, the student supports. There's no way to get it out that fast and get it right. There's going to be a lot of challenges, but it's going to be interesting to see how history looks back and says, could they have done it better given the circumstances? And that's, I think, what has to be weighed, is given the circumstances. The speed definitely played a massive factor there. Had they tried to do it better, or perhaps more with more controls in place, it would have taken a lot more time. So, I think it's going to be really interesting to see how history plays that out. And of course, tech billionaires made record profits, and they're all, their astronomical amount of wealth has just grown as we see the battle for top space between Bezos and Musk and Zuckerberg, up there, Gates still in the fray. But what really happened to the economy? And I think if you look at where the damage was really done, hospitality industry, and especially in the U.S., which is kind of a looking glass into what we have to keep an eye on the economy, is those hourly workers who don't have all the benefits. They don't have sick leave. They don't have the opportunity to work remotely in many, many cases where a lot of that damage was done. And yet we categorized a lot of these lower paying, less benefits, less support. We categorized them as frontline workers, and as a society, we kind of went out and recognized them for being out there and helping us. I mean, there's the frontline, of course, medical and first responders, which was incredible, especially when you look at the medical staff having to deal with the COVID outbreaks directly. And as the numbers rise again, of course, they're on the forefront of all that. But even when we take a look at the service industries that stayed open, the grocery stores that stayed open, it's going to be really interesting again to see what happens as we move forward here. Are they going to be recognized? Are the pay is going to be recognized? Are people going to be willing to pay more for those services going forward, given how much we relied on them through all this? So I find this going to be an interesting case study when it comes to kind of looking back. And of course, where are we today? Well, we've got housing at all-time highs, breaking records every month when the numbers come out, which is good if you're selling or even if you're holding. There is a lot of concern now kind of building up around the housing market. Even the government of Canada talking about how they might be able to slow this down a little bit. It's mostly be driven, of course, by the cheap rates, the cheap mortgage rates. For people to be able to get into the market or spend more money than they normally would have. Of course, there's the danger behind that is more and more people spend, especially borrow. If rates start to increase, then it can cause hopefully not a collapse, but if you got a 2% mortgage rate and it renews in 5 years at 4%, well, your monthly mortgage bill could double. So it's important to keep that in mind when people are out there borrowing. So there is some movement. There's even talks of taking away our tax-free principal residence and instituting the capital gain tax on it. I don't think they go that far. I think they might raise the capital gains tax from 50% inclusion to 75% inclusion, well before they did the principal residence. But it's kind of scary that it's out there as potential suggestion. So there are talks about things slowing down. I think one of the most pessimistic forecasts I saw was a 40% drop on the housing prices in Canada. I think that's probably way too pessimistic, especially if you look at the different areas. Calgary or Alberta, for example, has already been really high hit. I don't think we can take another 40% drop, or don't think they would. Ontario would probably be the hardest hit, given that they're a sprawling community. BC tends to always be a little bit more buoyant because we are, locked. There's only so far, there's only so much space before you run into a mountain or water. So BC tends to, while we have ups and downs, be a little bit insulated from the big drops. But that's something we have to keep a really close eye on out there. And of course, the markets hit an all-time high again yesterday. Which is great, that they bounced back that high. Again, though, we saw the start of this year, after highs of last year, we saw that pullback, especially around some of the overvalued names in the growth sectors, especially around some technology names, and now money moving over into those value names, which we've been talking about since January. So we're seeing some nice growth in those arenas. But again, being concerned, which is why we're seeing the futures today sell off a little bit, just as people see, let's keep this growth tempered. Now the IMF has raised the outlook for Canada's growth this year from 3.6 to 5.3. So we are looking for good growth in the Canadian markets this year, but I think a little bit more tempered than we saw last year as far as how quick we can see that move. So again, this year, I won't get too much into themes. We covered off the innovation last week. We covered, I think, the week before that, we talked about value trend in the markets. But that's what we are today. That's what we've come through in this last year. Hopefully we're at the home stretch. I know I'm doing a year in review, kind of like, hey, it's over. We're moving forward. We're definitely not at that stage yet, but we are progressing. The vaccines are moving. Hopefully the new variants, don't cause a problem with the vaccine's effectiveness to allow us to reopen, as quickly as possible and get back to that new normal. And I know that's the buzzword that's out there, but do keep in mind, we're probably going to open in a different way. What we've been through this last year, I think, is really going to change things on an ongoing basis. Whether that's, people continue to online shop. Obviously, last week we covered a lot about those innovative technology, which is changing the way we're doing things. Even how we used to, go back to doing what we used to do, but we're going to do them differently. Of course, travel is going to be different. I don't know that certainly for the foreseeable future, you'll be traveling without a mask, at least while on the plane. Education, how that's going to change going forward. Obviously, especially when we talk about the universities and colleges that had to shift to full online, bring the technology up to speed. Is that going to be an ongoing offering for distance students who, save on the housing costs, save on the travel costs? Is that going to be more and more implemented more broadly moving forward? I do think we're all these things are up for discussion, and I think we're going to see a lot of those changes as we come out of this. But with that, I won't keep you guys anymore. Thank you so much for joining us. As always, visit us at mikeonmoney.com. Give us your comments, your feedback. Always happy to take a deep dive into any topics that you guys would like to hear from. And as always, thanks for joining us. Talk to you again next week. Bye-bye.